Well, let me tell you what is going on as far as today's action, and I'll get into some things that we're focused on. Again, just introducing myself. This is the Option Professor, and the website is option, OPTION, professor.com. And basically, a little background, I've been doing this for 40 years. So I've been in the markets for quite a long time, and I'm very familiar with stocks, options, interest rates, all types of ways to make income, the energy sector, the gold and silver. So I'm pretty familiar with the whole 9 yards. And I share my opinions and my inputs. What we don't do is we don't do advice. That comes from your brokerage firm. That's why we always say consult your brokerage firm to find out what's appropriate and what's not, and your advisor and people like that. What we do is we share our views and our opinions that is gleaned over all these many, many years of experience. Let me see what's going on in the chat here quickly. Okay, yeah, enter your symbols if you have any symbols. Otherwise, let me tell you what I was seeing here today. First of all, the market has been giving us the buy signal for a long time. Just looking at our 1-year graph here, our first buy signal came in when the red turns up, and that came in at around 30, about 38.30, 38.50, right around there. Then on the 5-year graph, it also gave us a nice buy signal here when it turned up, got violated, but came right back. So anything around 38.50 was clearly a go sign, and adding at 4,000 or 39.50 was the way to go. So that's where we came up with the idea to get long. With regards to today, oh, and by the way, on the long-term graph, we had a big intersection here. We did hit. Now, here's what's going to give you a key on something that helped us today. Can you see the 24 SMA was coming in at 42.08? When I sent out a quick alert, I mentioned a resistance at 42.08. Can you see what the high is on the S&P today? It is 42.08. So that's why we thought it was a place to sell there. And obviously, there was a heck of a nice little short-term trade, because if you look at the day trade here, we went from 42.08 all the way down to 41.55. So does anyone like the idea of about 65 points, or excuse me, 55 points as far as a short-term deal is concerned? And then obviously it's gotten back on the bicycle here at the end of the day. But that's a heck of a nice little pickup for one day. And where did we get it from? We got it from a couple of things. One was that 20-year SMA chart, and the other one was divergence. Can you see here the RSI was at 74? That's earlier in the day. That's when we were at 41.95. Can you see when we went up here, the RSI was only 58? That's called a divergence. So we had the 20-year graph saying hit it, and we had the divergence saying hit it. And so obviously hitting it made a lot of sense. But in this market, with the animal spirits running around, you got to keep things on a short leash. So again, you could either grab the money when it's down here, or, and let's just look at anything else that might have told us it might stop there. As you can see, there's a reason why I stopped there on our monthly graph. So there was a reason to cover down there right around the 41.57 area, because that's where that thing was coming in at 41.60. You know, these numbers don't get pulled out of hats. They're mathematical numbers, and we find them very, very effective. Okay, so that's basically the story on what happened today in our view. And so that's pretty much done and gone. But what is going to be happening now looking forward? Let's take a look here and see our viewpoints here. I'll give you the 3 major indexes, because that's what most people are trading, right? So the first one is the 20-year. Obviously, this long-term, this is a very important one. And this is where people are getting that sometime later in the year, we might go down towards 3,000. Because you can see technically it did hit that a bunch of times in the 2000, it hugged it around 2010 to 2012 and then took off. And then during the crash, you think it's coincidental it stopped right there? I don't think so. So the bottom line is, if it stops here at 4,400 or 4,200, where we hit today in this zone, and it starts rolling over, because in April, May, and June, you're going to have the first quarter earnings. And the first quarter earnings may not be so great because of the lag effects of the Fed. If that's in fact true, then where would we possibly go if earnings really started to break? Well, here's where they're talking about 3,000. Okay, that's where they're getting the number from technically. All right, so it's not like out of their ear that they're coming up with these numbers. And mathematically, it's going to be about earnings. So if your earnings is $200, on the S&P, and you have a 15-to-1 PE ratio, then you're talking about 3,000, right? So the bottom line is that's how the math works out. But right now you can't fight the tape, and we haven't either. So that's why, again, these numbers are pointing up. The earliest this thing could start coming down on the yearly, you'd have to start breaking underneath 40, 50. That's what we said was a support zone. And then on the 5-year, you got everybody in here in the 39.50 area. And I think if you look at your 250-day moving averages, they come in around the 39.50 ballpark area. So if it starts breaking under 39.50 for whatever reason, that would be indicating that maybe that lower price thing we just showed you on the 20-year could start being happening. So again, that's why you got to be flexible this year. If you're not flexible and you want to be bearish, you're getting killed. If you're going to get bearish when everyone is euphoric, you're going to get bullish when everyone is euphoric, and maybe it can't get above this 4,400, 4,200 neighborhood, then you're going to get whacked the other way. So you got to be flexible because things do change. The Fed came out yesterday, obviously in the statement, he's Mr. Conservative, we're going to keep rates higher. We're going to fight this inflation to the end. We are way not done yet. That's his statement. Then he goes off script, starts talking about, hey, maybe we'll cut at the end of the year if the data is there. Hey, inflation could start collapsing from here. Hey, all kinds of easy talk type stuff. Not in the script. And will he talk it back? I mean, this is the kind of guy that in July of last year, he's talking like he did today. And in August in Jackson Hole, he sounded like the toughest drill sergeant you ever heard. So the bottom line is this guy can go any way, this pal. Bottom line, though, is that it's caused a tremendous rally in the stock market that you do not want to fight. And it also has caused a big rally in the bond market as interest rates have dropped. Let me show you this real quick, because these are the three things that really have made the big change. This is why you're getting these rallies. You're getting these rallies because the Treasury note on the 10-year has gone down, and it has gone down from 430 down here to 340. And you can see this is a neighborhood that's very important, because if it gets through this neighborhood, you could get a big air pocket and you could get a melt up in the bond market and a big drop in yields. You could, or with the euphoric area of buying bonds for the last 90 days and the euphoric area of buying the stock market in the last 90 days, if this stuff holds here, then the news could change to the inflation rates not coming down that fast. The labor market is ridiculously strong. Prices on food and other things are not coming down. Rents are not being discounted. And if that's the case, then obviously everyone is leaning one way right now. They're leaning long bonds, they're leaning long euro, and they're leaning long stocks. And when everyone is leaning this far, it's either the beginning of something that won't stop, or it's a big reversion situation, right? Reversion means you were up here at 440 and you revert down to the averages. And after you revert down to the averages, like you did between June and August of last year, after that reversion is done, sometimes it goes on the bicycle again. And so that's why you have to be careful here to get too bullish the bond market. If we can't take out these 340 numbers and really start closing underneath it, that's very key. And then, of course, the US dollar is the other reason that these markets have rallied. And so let's see what that looks like. Because a lot of these things are not new concepts. The easing of yield has been going on for a while. And this drop in the US dollar has taken away about 80% of the run from last year. And it's come down 11%. So, I mean, this is reversion to the mean, right? That's reversion to the mean. So do you think I want to get bearish on the dollar here, like every freaking guy in the world? No, I don't want to do that. You know why? Because if it can't get under here and anything changes, like how about Europe goes into a recession? You want to own the euro during a recession over there? They're only at 3% interest. We're at 4.5. So we have a yield advantage over them still. And so bottom line is that, this is a very, very mature drop. Okay. And it's coming into that support zone. So if anything, I'd probably be shorting the euro at 111 today and looking for it to, have a correction, So bottom line is be careful to not follow the headlines all the way, because again, these things have already occurred. Okay. Now, we told you about the S&P here, and let's just go back there and give you those support. So the reason why this thing is rallying, this reason why everyone's jumping into Europe and EM. You also can see that a lot of what the reasoning has already happened. And if those reasons change, again, this rally could have some problems. I don't know if it's going to be next week, in a month, or 2 months. But you know what? If this dollar doesn't keep going down, that might be a problem. If these interest rates don't keep dropping, the yields, that could be a problem. And is anybody talking like that? No, that's the train that can hit people, because the train that hits you is the train you don't see coming. Why are these bears getting so terribly wiped out? Because they didn't see, or they didn't look, that the dollar was dropping, that the yields were dropping, that inflation had gone from 9 to 6.5, that the wages were slowing down a bit. Okay. And if you don't see that coming, you're going to get whacked. Well, now I'm saying on the other side of the coin, there's things that could change that drove this market higher that could get you whacked the other way. So you got to keep your antenna up. Okay. Let's take a look at the S&P. Like I say, if you do it 40 years, you obviously get a little bit of, perspective and composure when things get one way or the other, right? Okay. So where does it look now on the 1 month here? Again, do you have a big divergence? Well, here's the RSI at 70 here. And where is it on this big rally we had today? 64. That's a divergence. Okay, that's a divergence. The divergence might be telling us that this is exhaustive. Okay, it might. Keep an eye on it. I would say it is exhaustive. Okay, so there you go. And the RSI is still above 50, which is good. But watch the number 4160. It's a heck of a, looks like a decent line in the sand. What do you do up here if in fact you think it might be stretched? You start looking at selling calls out of the money. You go 10 or 20% out of the money here, you'll still probably get handsomely paid, particularly on the tech sector. And or take that premium you receive and buy puts. So now you're collared. Collared means you have a limited upside and a floor on the downside. And then also you could do married puts. I mean, for gosh sake, if you made 30 points on something and you throw $5 at insurance, it's not going to kill you. So there's, or trim. So there's a number of things you can do up here if you think that we might be getting into an exhaustive area. And if you're not sure about how they work, that's what we do. We explain how those things work. Optionprofessor.com. All right, I'm going to go through a couple more things, and I'm going to get into a symbol or two that I'm hearing here. So just give me a second. Okay, so there you go on the S&P. Okay, it'll be very interesting to see if we can keep this thing going. Obviously, this was a big pointed hit. If it takes it out, the next point I see is 4306, which is a 61.8% retracement from the high point of 4810 to the low point of 3491. 61% throwback, a little bit over 4,300. Not that far away. 100 points away, you'll be there. Okay, so those are the two resistance points. And on the support, I would definitely look at 4160 as a very short-term important point. Okay, let's take a look at QQQ. I got to hurry up because this is an abbreviated version. We're only going to go 30 minutes on this one. I got things to do. I'm sure you guys do too. It's lunchtime, right? Oh, here it is in the West anyway. Dinner time for you guys on the East. Okay, catch the early train. Where are you on the QQQs? Okay, this thing couldn't get out of its own way. So talk about a bear market bounce. Now it's come up to a very important level. Can you see that blue line? It comes in at where? 310. So this neighborhood around 310 is key. If it can get through that, that's very good. If it fails from here, that's not good. And if it gets back under 300, that's not good either. Now, on a short-term basis, what would it tell us that might be something to watch? First of all, you got a gap there, And then basically on the 1 month, you had RSI at 72, and then you've made this other big rally up here, and it's still 78. So on the Nasdaq, you don't have a divergence on the monthly at all. Very strong. And again, see, it's you got a gap there, you know, that could come down and get filled. Who knows? Or it could be on its way further up. My next resistance on this thing would have been the August highs, which comes in at 335, 325, 325. Okay. Like I say, if these yields keep going down, it'll continue to fuel this. How many people were short or out of tech from last year? How does the whole planet sound? What do you think the whole planet's doing in the last 90 days? Coming back into tech, right? Why? Because they think interest rates are never going any higher, and they think that they're actually going to be cut way down, and we're going to go back to easy money, and it doesn't matter about valuations. Do you really think that's going to happen? If you do, stick with tech. If you think that's a crazy story that will not last, then be careful up here. But you got to make a decision one way or the other. With regards to, so, and again, you can see 290 is where the 1 year average is, so it's extended. The 5 year, again, down at 280. Okay, so I see the support right here, some support at 310 and 300. Those are two pretty reasonable numbers. If it gets under those two numbers, then I would be concerned. And that's not that far from here. On the 1 month, how far does it go up? Yeah, see 300. So 300 and 310. Those are two numbers I'd keep an eye on the NASDAQ. Okay, and what about those small caps? That's something I told people about a year ago when they started to turn. Basically, you're looking at right now, well, this one's pretty easy to find out where the support is. It's at 190 and 185. You see 190, big support there. And if you go further out on the 20 year, you got 190 and then 185, I think also comes in. And again, that has some resistance at the green line there at 202. So I put that in the quick alert too. 202 could be a problem for it too. On the short-term basis, again, you got a high point here at 71, and then you got a high point. So no big divergence. So basically, short-term, 193, then you go to 190, and you see where I'm getting my 184, 185. So there's your three lines of support. Okay. Let's take a look at one of the things that the guys out there in Cyberland want me to look at, EXPM. EXPM. That's not coming up, so I don't know if that's the correct symbol. So if you want to correct that symbol, because I'm putting it in here and I'm not getting anything coming up, EXPM. Okay, so please correct that. Be more than happy to take a look if you'd like. Okay, we only got about 12 minutes left. Let me run around a couple of things that we've liked and people have been very happy with. Okay, we've been trying to looking at the industrial metals. Why? Because China's reopening, and it could be a situation where they could have a future. Today they're off a little bit, but take a look at some of these things because, again, they look like they could have a pretty good future, right? A lot of real estate on the upside. Okay, there's one for you here. I'll give you another one here. Industrial metals, they're not making mines any longer, so sometimes we can get outside our skis as far as demand versus supply. And you'll see this is another one that has a pretty good look to it if it starts going, and it looks like it might start going. So keep an eye on industrial metals. Then there are precious metals, which may also have a future to them as well. And this one here is down pretty sharply today. It came down. This is when it was a buy, 40.45. Right now it's come up and it has some resistance. If I'm looking at the support here, you'd like it to stay above 50, and it obviously it's one of the leaders in the metal area, and it used to be 85. So if it gets going, it certainly got some real estate above. And of course, everyone's favorite copper stock. And like I say, this one was one of our favorites because we bought it at like 10 bucks. You see this? Once it got above here, just like the industrial metals could do this. That's why I'm interested. It went nuts. Okay, comes back, you get out, come back when it hits this thing here. And now from 25, it's already up to 43. Okay. So again, it could start failing from here. So this is not the best place to get in. Down here is a good place to get in, but the bottom line is there could be a future. Those other industrial metal stocks seem to be in better setups, but time will tell. Okay, XLE looks like it might be rolling over here. Let's take a look at that. And you'll see that you got a high point here with an RSI of what? 59.60, and over, excuse me, here you got a 66, another test, and it's lower. If it breaks under here, low 80s, that's not good. So keep an eye on XLE. Again, they have good earnings. They're buying back their own stock. It's a very good place, but it looks like it's already had a pretty big move. What hasn't had a big move, and we've been focused, because I like to have the odds on our side. You get it? Odds on our side. Now, this one is a 20-year graph, and this thing looks to me like it may have a lot of real estate on the upside. This is the oil servicers. So let's take a look here. Again, it looks like there's some air up here to fill in possibly. So we're kind of looking at that. And then you've got the explorers. Maybe at some point they'll start looking for oil. That'd be nice. And this one again, has had a pretty good size move, but all of them look like they are vulnerable here. So you got to be careful. The red line's pointing down here. Start breaking under 130, could come down and test that thing. Okay. The gentleman who, excuse me, he had a couple of other questions. Let's look at these. 3X. Sounds like a very big person. 3X, huh? Okay, how long has this stuff been around? Has it been around enough to use a 20-year graph? No. So we use a 5-year graph. What's it telling me? It looks like it turned up, and you look like you should be long at around 20 bucks right now. That's what it looks like to me. And the RSI is at 43 though, or where is it now? Yeah, now it's at 54. So your RSI has gone through 50. You're holding the red. So obviously it's a long. What about the 1 year? 1 year again gives the buy signal even at 16. And then obviously it's been tugging it. So where do you want to keep it above? You want to keep it above 22 bucks. A little bit overbought. Could it come back and fill the gap? Sure. But the momentum seems to be to the upside here. Again, on a 1 month basis, if you're trading it for a very short term, again, extended, gap to be filled, 24 is a number. So looking at this thing, it looked like 16 was a buy signal, 20 was a buy signal, and 24, 22 is an area where you definitely want it to stay above if you're long. And that's the story on that one. Let's look at SQQ. All right, SQQQQ. Let's see what you want to do. This is the short QQQ. Let's take a look at this. I'm sure this hadn't been around for 20 years, so let's go to the 5-year. Yeah, this is why I don't get too involved with these things, because you know what? It's a who shot. It's kind of like crypto, who shot John, and who's responsible, who put this thing together, what do you actually own, what do you don't own? Yeah. So when you ask straight questions, and you get crooked answers, that's never a good thing. Okay. So anyway, I'm sure they could have a good answer. I probably wouldn't get it though. But anyway, if you want to trade this thing right now on the 5-year graph, it tells me absolutely nothing. Except that it's been dropping and you're probably losing money by keeping it for any length of time. And then here, okay, now we got better data to work with. So again, this thing, you got a buy signal at 44 and you got a sell signal at 54. This thing you should be short. It is extended now. Okay, so you got to be careful that it might turn around on you. It came down to the lows here. So it's, this is a place where I can see where you're sniffing around, but you're definitely standing in front of a freight train. With no real evidence of a turn, unless I keep going to the 1 month and I can get some evidence for you. Right now, it's got a gap that it could fill, and it's 10 bucks or $8 underneath where the red line is. And it sometimes gravitates back, reversion, reversion, reversion. So if you're buying it down here, you're hoping against hope that it holds. You're hoping it fills this thing here, and you're hoping for a reversion rally. Now on the monthly, Any evidence? No, there's no evidence here of a turn here. So again, it's a hope against hope. Hey, listen, a broken clock is right twice a day. So, you could get lucky on this. It's obviously turning up pretty nicely in the post market. So God bless you. If you're using a day trade thing, you got a buy signal here at 32.60, a sell at 33.80, and the aftermarket is trading above 33.80. So for all I know, tomorrow it's going to turn back up. And again, if we got earnings coming out with these guys, if these earnings come out lousy, I don't know, I'm not privy to it right in front of me, but if they come out lousy, let's see if Amazon or anybody's, see if they have any trades going on here. Amazon's aftermarket is down, so I guess they didn't do well. Google's aftermarket is down, so they didn't do good. And let's see if we have a trifecta. I know how Apple would be doing good. Samsung said their phone exports are down like 60%. So, unless these guys are playing on a different playing field, no, they're down as well. Okay, so that's why you're going to get a turn here. And that's why the guys playing SQQ could get a breather here. But boy, again, a reversion rally is what you're playing for here because the trend is definitely down. But again, you could play it for a bounce if you're an aggressive trader, and that's, I guess, what you're doing out there. All right, we're coming to the end of the show here, and I obviously can't go over everything that I'm doing or looking into, and I can't go over all the stuff that you're looking at. But what I can do is invite you to go over to optionprofessor.com, OPTION, professor, PROFESSOR. Put your information in, email and phone. I'll ring you back and I'll explain that we got a PDF report for you that explains how to hedge or protect yourself against market declines, protect your values against market declines, and also up moves that can come out of the blue. There's a way of hedging against those things. I got a PDF that explains it. Second thing, I give you the best stocks that we see by sector. Doesn't mean we like every sector, but if you are involved in a sector, we think these are some of the best ones you can look at. So that's our opinion there. And then finally, we have an online review where we explain some of the things that we're looking at that have worked. And then we also go over stuff that you have, and we do not do any advice. There is no advice involved, but we do have an opinion on markets, and that's what we share. So we do a little online thing like that, which is very helpful as well. We don't have monthly charges. We don't have annual fees. We're not playing the piggyback on the public game. We have a very fair situation, a very smart situation that we have with our customers. And basically, we can explain all that when you put your information in. We'll have more time to give you all the details, but I think you'll be very happy with it. It's very fair in our view and very smart way of going. Also, as far as options are concerned, obviously I've been doing the options for 4 decades. So I've done what? I probably had thousands and thousands of people go to my seminars over the years. So I clearly know exactly how to explain them to you. And different techniques that you might not be doing, or when's I'll give you my opinion on when's the best time where these type of strategies might work the best. Because you buy options all the time, they're going to get you. You write options all the time, they're going to get you. So you've got to, obviously, in our view, look for when the odds are on your side. And we try to help you with that type of situation. And also, like I say, how to repair positions, how to roll them, how to buy deep in the options, and then sell calls. Call selling, when the premiums are huge and the prices are high, come on, that's the time to take a hard look at it. So bottom line is that, on the way down, a lot of people didn't lose that much money on the tech because they kept writing those fat calls on Apple, fat calls on NVIDIA, fat calls on Tesla, which obviously, even if you went 20% of the money, you never got really tagged and you could keep selling the premium every time it rallied. So it was definitely a valuable strategy. And obviously I'm versed in that as well. So again, the invitation is to go to the website, optionprofessor.com. Put your information in. We'll talk. I'll explain how it works. It's very smart, very reasonable, and particularly compared to these people that charge annual fees and these chat rooms that charge all that money. I mean, that's out of bounds. So put your information in. This is the Option Professor speaking, and optionprofessor.com. And if what we do is good for you, which I think it would be, then we do something. And if it's not, then good luck on whatever you do. So that's how we operate. All right, guys, 30 minutes and my time's up. I want to wish you all a very good weekend coming up. Tomorrow we got jobs report, huh? JOLTS was fabulous, 1.9 to 1 jobs available to people out there looking. So forget about the labor market cracking. And yes, the wages didn't grow quite as much, but I wouldn't get party hats out over a very small difference. They're still growing. The wages are still growing. The PCE is still growing. Inflation is still growing. Okay. So again, a little too early to get party hats out. Give me a ring, go to the website. I'll speak to you soon. Thanks a lot for being with us today. And don't forget to continue to look into TimingResearch.com for our updates we have. We have stuff going on Monday. And again, we look forward to seeing you at future events. Again, this is the Option Professor of OptionProfessor.com. Good luck. God bless. And we will be talking to you soon.